Hi and welcome to Swissquote's Daily Market Talk. It's Tuesday, October 7th, but it feels like ages since this week started. OpenAI announced a massive deal with AMD yesterday, shadowing the fact that the US government remains shut and the data delayed. Then the French political chaos just got worse, and the rally that we saw in Japanese stocks yesterday posed as investors around the world asked themselves whether Takaichi, who is being compared to Shinzo Abe, for example, has the same tools and maneuver margin in hand to revive growth in Japan. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So forget about the US government shutdown, the French political chaos, and the new Japanese PM candidate that many try to compare to Margaret Thatcher and Abe. One big news yesterday was from OpenAI, and it actually overtook the headlines and dominated the market action. The news that they actually signed a blockbuster deal with AMD. Yes, AMD, which is the rival of Nvidia in AI chip business. A deal that actually says that the company, OpenAI, will deploy 6 gigawatts worth of AMD graphics processing units over multiple years ahead. That is just over half of the size of an agreement that OpenAI announced with Nvidia just a few days ago, and it will, according to the AMD CEO Lisa Su, will generate up to 100 billion US dollars and even more in revenue for AMD over the next 4 years. So yes, bingo, AMD shares spiked more than 30% yesterday at the open and closed up by 23% by the end of the session on the OpenAI news and opportunity obviously that comes from it, while Nvidia was down by just 1.1%. That's much less than what it would lose if the deal was announced in another sequence of information. Because look, Nvidia just pledged to invest up to 100 billion US dollars in OpenAI, capital that will partly be used to buy the Nvidia chips. And now OpenAI announced its blockbuster deal with AMD, and they also said that they are taking around 10% stake in the company in AMD. So for those who are actually worried and concerned about the circular nature of this business growth model, the news are obviously getting more circular by the day. But the circularity also suggests that Nvidia wouldn't obviously put 100 billion US dollars in a company that would replace its chips by the chips of its rival. So the conclusion here is OpenAI is more concerned today about not being able to meet exploding AI demand in the future than the contrary. They also announced deals with South Korean chip makers last week, remember, sending their prices soaring. So this company, OpenAI, believes that the AI pie will be big enough to largely feed every player on the field. And for AI and technology investors, that is an optimism boosting news, obviously, a signal from the OpenAI that counterweighs the worries of potentially lower than anticipated AI revenue that wouldn't live up to the massive amount of investment that is being made today by the big technology giants. As such, the S&P 500 consolidated yesterday near an all-time high level, while the technology-heavy Nasdaq 100 index pushed to a fresh all-time high level yesterday thanks to OpenAI. Now, elsewhere, the news were obviously much less cheery, to say the least. In the politics, well, it's not going great. The US government remains shut, but the US dollar index is slightly better bid this week because the other major currencies are not looking any better. Telling you, because if you're looking in France, for example, well, the French political chaos is only getting worse by the hour because the new PM, Mr. Cornu there, just resigned after just 14 hours in office as the new cabinet announced by the president Emmanuel Macron was largely unchanged compared to the previous government that just fell, rising the risk of no confidence as soon as the cabinet members were actually announced. So, Mr. Le Cornu still accepted Emmanuel Macron's call for helping him and trying to make things work for another 48 hours, but truly there is little light at the end of the French political tunnel right now. France, as it stands today, is hardly governable. So, this is what we see in the bonds market. The yield spread between the French and German 10-year yield actually spiked past 85 basis points level yesterday, and this time around we could well see it widen to 100 basis points, hence limiting the upside potential of the euro. So the euro dollar is trading below the 117 level this morning at the time I am talking here, and will likely remain under the pressure of French shenanigans, French political shenanigans, for a little more while. In Japan, the Japanese yen also remains under the pressure of the new LDP appointee, Takaichi, who is about to become the new PM in Japan and who loves loose monetary and fiscal policies and is being now compared to Margaret Thatcher and even to Shinzo Abe due to her love for ultra lows and easy monetary and fiscal policies. And in the UK, the upcoming budget is such a big concern among investors that going into sterling doesn't even look like an option. So where does the capital flow? The capital flows into safe pockets of the market, including US Treasury, somehow gold, silver, and even Bitcoin. And a further weakness in the US dollar, which is the base case scenario, mind you, as long as the US government remains shut, and it does remain shut for the moment, well, a further government shutdown should directly give support to these assets by further weakening the US dollar. Now, diving into Japan, Nikkei is consolidating gains today after a more than 5% rally that we saw yesterday as JGBs remain under pressure with long maturity yields in Japan at multi-decade high levels. Now, I have been asked yesterday a very interesting question, and that was whether the arrival of Takaichi could create the same level of optimism that Abe did more than a decade ago, remember, as Takaichi also seems eager to revive the same pro-growth playbook in Japan by using easy fiscal and ultra-loose monetary policies to keep the market pumped. And also some structural reforms and a weaker Japanese yen to increase the Japanese companies' appeal, their international competitiveness further. So note that there are some key differences between Takaichi and Abe that makes me think that it's not going to be possible, because Abe's three-arrow strategy, which was fiscal stimulus, ultra-loose monetary policy, and structural reforms, actually came at a time when inflation in Japan was below zero and the Japanese debt to GDP ratio was much lower than it is today. So the latter gave Mr. Abe maneuver room for both easing the fiscal and the monetary policies by a large amount and give an ample support to the Japanese economy. Takaichi, on the other hand, today simply doesn't have the same room to maneuver because inflation in Japan is rising and Japan's debt stands at around 216% of its GDP compared to just 186% back in 2013, and the sustainability of this rising debt to GDP ratio is increasingly questioned, pushing the long maturity yields in Japan to multi-decade high levels. The Japanese 30-year JGB yield even hit an all-time high level yesterday. And this rising cost of debt means that investors will be asking more to finance another massive spending plan in Japan, which limits the size of the fiscal stimulus plans for Japan, and that could eventually not go well as it has been the case in the UK, remember. Then, the Bank of Japan is tightening its monetary policy these days, is not easing it, and the Japanese yen is weak, that's cool, but that also stirs inflation in Japan, which would limit the potential of any BOJ support. So yes, a further rise in Japanese equities is well possible, especially if the global risk appetite stays strong as it is today. But a repeat of the Abenomics kind of rally looks very, very much unlikely to me. And with JGB yields at multi-decade high levels and rising, domestic investors may even start repatriating their funds and return to JGBs, a move that could then trigger this reverse carry trade in the Japanese yen and send shockwaves across the global financial market. So my bottom line here is there is more risk in what Takaichi is trying to do today in Japan than what equity bulls are probably pricing in or price in as a knee-jerk reaction to Takaichi's nomination. Abe, on the other hand, came at a very lucky time with bold new ideas. Takaichi, on her end, will need her own recipe that makes sense in the actual context of rising inflation and debt metrics in Japan if she wants to make history like Shinzo Abe did. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.